Morning, welcome to One Financial Markets morning commentary. I'm Andrew Johnston. So, it was all about non-farms last week, and what happens after non-farm is then we get an absolute zero amount of economic data out. The first pieces come out Thursday of any interest this week, so we're pretty dry until we've got crude inventories tomorrow, but we're pretty dry up until Thursday and Friday. But I think the market sentiment as of yesterday, in terms of the way price action was happening, kind of told us that people are fading the move that happened on Friday. So Friday it was an improvement, 205 if I recall. And yeah, the speculators, the day traders, the people in for a quick buck, all took the appropriate action in terms of the way that the market would have related to that figure. Euro came off, dollar index went up, dollar went up, Euro sterling actually went up, which was a better trade. Dow stayed around where it was, and gold came off. Gold has basically been bid for the last probably 7 to 10 days. And the reason why it's been bid is because of the weakness in the dollar. And it probably took the biggest, along with Euro, took the biggest hit. Euro came off, we're just looking at this chart here, Euro came off 100 pips, but it was very, very staggered, so it meant you could get in and out and trade this. It's now retraced nearly 60%, well 50% of its move that it made on the Friday, and I fully believe it to make the full retracement and for us to go back into this lovely upwards momentum here. The dollar dollar index chart here had a small pullback, but it's gone off, and that's going to be retraced as well. The dollar needs to be weak for people to invest in the US economy and to do what Trump wants. Trump wants probably a 50% increase in the equity market prior to his year of being in office. And a man of his arrogance would probably actually want 100%, but he's now probably at about the 20% level, apparently, saying that the market's increased since he's come in, and he's in total, that is, and he will look to try and make that significantly higher. He will try and drive this dollar down with whatever he can in the background to as low as possible, so that people will invest in US equities, and makes it a lot more, a cheaper dollar makes it a lot better for his exports. Because he is having a trade war with China, believe it or not. I think he will lose that, but this is considering China owns, I think, a large proportion, nearly 30% of US debt. So you don't start pushing around someone or try to go to war with someone who owns 30% of your country, basically. So I think he might, if he starts to try and pull some punches with the Chinese, he might lose just because they own them, basically. So basically what we're looking at today in terms of price action, I think once again it's going to be very, very range bound. There's not a lot going on. I fully expect euro dollar to retrace the move that it made on the Friday on the non-farm payrolls number. Remember that move there is not the consensus move. It's the sentiment move at that time based on that figure. So that is speculators, day traders, people in and out for that amount only. They're only in for that day. And then once everyone comes back and figures out what the market's actually doing, it's like, oh, actually, dollar is going to be yours, and we're going to go back to the consensus, which was risk on, and dollar off, basically. So euro, I fully expect to retrace. Gold, I fully expect to retrace as well as the dollar starts to plummet again. And Dow will probably continue to make, and US equities continue to make new highs. We can't fight with the consensus until something really different happens in the market. The non-farm payroll number was an improvement, but it's not gonna change anyone's views or make them do anything drastic at the moment. Yellen pushing around other rate hikes and balance sheet normalization chat and all that sort of stuff. Yeah, great. She does it just to kind of for those lefties out there who need to be told that they're going to, start cutting back and and reel themselves in. But the fact is they can't. None of these countries can out there. They're G10 countries. Everyone who's debt ridden, as soon as they start calling in markers and saying that I use, basically, the whole thing collapses. So they can't. So it's just a circle of debt, and it'll continue to be a circle of debt, and there'll continue to have to be low rates to accommodate these all these companies out there. They call them zombie companies, and basically they're just surviving in low rates. Now, as soon as the rates go up, all these companies collapse. Guess what? All these companies have loads of employees that work for them, and they're out of a job. And if they're out of a job, who's going to look after them? Oh, we look at it as it goes to the government. Oh, but the government's in so much debt because guess what? They try and sell bonds to the market every month. So it's just a cycle that unfortunately, we cannot change at the moment, and I don't see it changing for the foreseeable future. And if it does change, it's going to take a big action in the world, and I probably would be some sort of conflict or war where the major powers are involved, and that would clear a lot of this stuff out. But I'm not advocating that I want war, but sometimes it does work. Don't quote me on that. So today we'll just look at the ranges, look at how the market balances out. Once again, it is summertime, not a lot of people around, and I think just a lot of people just not wanting to take positions. If they're in for a short-term period. As you can see by this Euro chart, everyone took the figure, got short. People are probably getting long there and get stopped out, and this is why it's dragged back here. And then it's like the consensus is back to square one. So if you're going to be trading out there, watch the ranges, watch for breakouts, watch for news. Mr. Trump has been very active as usual. Just waffles on all the time about bad news. It's just comical. But yeah, as I say, I don't really think there's going to be much in the market today, but you can always always keep an eye out for potential news headlines and hot headlines that come out. But for me in the front lines, we'll speak to you tomorrow.